Hello everyone, I welcome you all to Streaks webinar. Today's topic is about trading in sideways markets. We will be discussing various factors relating to trading in a directionless or a non-trending market. So many traders talk about strategies to be implemented in trading markets, but not a lot of importance is given to trading dynamics in a sideways market. Hence, to shed some light on this topic and to show you how you can take complete advantage of ranging markets using Streak, we bring to you today's educational webinar. So let's go ahead and get a bird's eye view of the topics that we will be covering today. What are range-bound markets? Importance of studying range-bound markets. Factors that cause range-bound markets. Some popular indicators I will be showing you all that you can use to trade in a range-bound market to be successful. Next, we'll be learning how to create a scanner to scan for stocks that are trading in a range, followed by creating strategies for range-bound markets, and lastly, we will have a conclusion wherein we will summarize the entire webinar and give you some key takeaway points, right? Before moving on, I'd like to make an announcement that on popular demand by our users, Streak has recently launched Create Plus. Using Create Plus, users can develop and deploy strategies involving complex chart patterns, divergences, and other indicator-based operations. You can now also convert all your existing scanners to a strategy at the click of just one single button. For the first time, you can now backtest and verify the success rate of your scanners. Today, we will be showing you a small demonstration of the same, but a detailed video on the topic will be available in our upcoming webinars. With the launch of Create Plus, backtesting is now possible at lightning speeds. At the blink of an eye, you will have your backtest results right in front of you. So without any further ado, let's dive into learning about trading in sideways markets. Characteristics of a range-bound market. How can you identify a sideways market? Now, in a range-bound market, price does not have a general direction or a trend. You will not necessarily be able to pinpoint whether price is in a bullish or bearish direction. Upward price action is usually cancelled out by an equivalent downward correction and vice versa. Price trades in a zone and keeps bouncing between specific high and low prices. So the price will keep oscillating between these levels. It will rebound and bounce back in the opposite direction from top to bottom and from bottom to top. These two price levels, this here is a strong resistance and this here is a strong support. There is a high selling pressure that is accumulated at this particular resistance, and there is a high buying pressure that is accumulated over here, which is why it does not let the price escape this region. Why is it important to learn about range-bound markets? So markets are directionless most of the times. Markets are not always trending. You can't always expect the price to be rallying. In fact, around 70% of the times, markets are range-bound and directionless. Learning to trade in sideways markets can increase the number of opportunities for a trader. So if you're only taking trades while the market is trending, you are utilizing approximately only 30% of all price movement. If you learn to trade in sideways markets, you can increase the number of opportunities that come your way. Correct? So range-bound strategies can be combined with trend-following systems to reduce the drawdowns. So range-bound strategies can also help you make up for the losses that are incurred by your trend-following strategies in a range-bound market. It works as some sort of a hedging technique. It will lower your overall loss and your overall maximum drawdown if you have strategies ready for both trend-following and range-bound markets. Now, what causes range-bound markets? There is an indecisiveness between the bulls and bears. There are certain mixed sentiments in the markets, and only a major tilt in the market sentiments will lead to a breakout. Till then, the stock will continue to be range-bound like this. It will keep oscillating between the high and the low points. The supply and demand has balanced out. This is the point where market demand and supply have reached an equilibrium. The bullish and bearish powers are more or less of the same magnitude at this point. Correct? They can occur at the end of strong trends when the buying or selling force has diminished. Now, ranging markets are also known as the calm before the storm. Okay, so before a strong trend starts, you can expect a choppy or a range bound market. You can expect the market resting, the price is resting before it makes a massive move. And also at the end of a strong trend, you will experience that either the buying or the selling pressure has been exhausted, and the market will again enter a range bound pattern. Indicators for range bound markets. What are some indicators that we can use to successfully trade in sideways markets? So a class of indicators known as oscillators are generally used in range bound markets, and a lot of traders are actually unaware that even in oscillators there are two types. The first types are the ones that oscillate around and about their center line, but they eventually cross below the zero line. And these kind of indicators are also very suitable for identifying momentum, for example, MACD and price rate of change. The next category of oscillators are range bound oscillators like the RSI and the stochastic, which can take up values only within a certain range like 0 to 100. These indicators are most effective in range bound markets and are usually used for identifying overbought and oversold regions. Okay, we'll be having a look in detail about some of these indicators. The popular oscillators are RSI, which is the relative strength index. It is a momentum oscillator and measures the rate of change of price, right? The upper boundary for the RSI is 100 and the lowest value that it can possibly take is 0. The oversold level is considered to be below 30. The RSI will be below 30 when the price has been falling for quite a while now. And similarly, the overbought level is above 70 and the RSI will only be above 70 when the price has been increasing, where there has been a lot of buying action in the market recently. MFI, which is also known as the money flow index, an extremely popular oscillator. It measures the buying and selling pressure. Its upper and lower bound is similar to that of RSI, but its generally accepted overbought level is above 80 and its generally acceptable oversold level is below 20. Moving on to the stochastic RSI. The oscillator is created by applying stochastic indicator over RSI values. Now, instead of using the price as an underlying, the stochastic RSI uses the RSI values itself, and hence it is way more sensitive than the RSI and creates way more many signals. The upper and lower bounds are also similar and identical to that of RSI. So now we're going to be creating a scanner that is going to help us identify stocks that are not trending. These stocks should have been trading in a range bound market. And now to achieve this, we are going to be using the ADX indicator, which is an excellent indicator when it comes to identifying trending and non-trending markets. And at the same time, we are going to use RSI, the relative strength index, that helps us identify the momentum of the price. So let's dive right in and try to create the scanner. All you have to do is log on to streak.zerodha.com and it will lead you to this dashboard page right here. Since we are creating a scanner, we will go to the create scanner section and begin. So I'm going to be scanning the entirety of Nifty 500 stocks. My time frame is going to be at an hour. You have the option to select either of the two chart types, that is candlestick and Heikin Ashi. But for this example, I'm going to be sticking to candlesticks. So let's begin. In the first condition, we're going to make sure that the ADX is lower than 20, because when the ADX is lower than 20, it signifies that the price is not trending, right? And if it's above 20 or 25, it means that the price is trending. So ADX lower than number 20. And at the same time, we want the RSI in a range. So we have to define that range, right? So RSI should be higher than number 30. We want the upper limit of the RSI to be 40. We want it to be between the 30 and 40 range. So RSI greater lower than number 40. Now in the fourth condition, what we are going to try to implement is that the RSI should have recently crossed above the oversold region, which is below 30. We want the RSI to have crossed it very recently. So for that, we are going to input this condition here, which makes use of the period min function. I'm selecting an offset as -1 because we do not want to consider the current candle, but rather the last 10 candles prior to the current candle. Lower than number 30. Now all of these three conditions you can simply substitute by using one condition, which is RSI crosses above 30, right? So that will also make sure that the RSI has very recently crossed above level 30. What this condition here does is that it compares the lowest RSI in the last 10 periods to the number 30. If that was lower than 30, then the stock satisfies the condition. So we're going to give this a name. Let's scan and save this. So these are the results that we have received from the scanner. Let's cross verify these results on kite charts. We are going to be charting Fortis. Since we have used the 1 hour time frame, let's match that here as well. Okay. So over here we can see that there is no certain trend in the market. Here you can't point out whether the price has a bullish outlook or a bearish outlook, right? And this also turns out to be sort of a support level. This is because the support level does not allow the price to break below it. It restricts the price in this particular range. This is the resistance here and this is the support here. Now let's plot the studies that we have put conditions regarding. Okay, so this ADX indicator here, do not pay attention to the green and red lines right now. We have nothing to do with them. We are not considering them in creating the scanner. Those are direction lines. For now, we only have to focus on the black line, which is the ADX line, right? So as we had put conditions into the scanner, the RSI is at 30.5, which is satisfying the conditions. And at the same time, the ADX is at 11, which again means that the price is not trending. The price is very much in a range bound market. Let's go ahead and check another example. Let's see India Cement. Okay, so here again we can see that the price is consolidating. It is not trending. There is no telling whether the price is bullish or bearish. This is because again the ADX is below the 20 level. It is at 17, and at the same time the RSI has just crossed over 30, which is somewhere a bullish signal, and the bullish signal has been received near a support level. So this is how the scanner actually helps us identify crucial trading opportunities that we can use to better our profitability. Scanning consolidating stocks with RSI crossover. So this scanner again will help us identify stocks that are in a range bound market, that are in a sideways market, but we are using another methodology to find out such stocks. What we are doing is we are using the highest and the lowest price points that the stock has established in the past 50 periods, right? And we are also using RSI. So let's head right in and create this scanner as well. So this is actually our discover page, which I would like to show y'all before creating the next scanner. because I understand that it can be tough to create your own scanner at first, which is why we have over 100 pre-designed scanners over here that have been hand-picked after thorough research by experts. So we have scanners available for every trading scenario. We have top gainers, top losers. We have intraday bullish and intraday bearish scanners. So there are scanners available on almost every time frame, which every kind of trader likes to use. One of our most popular scanners is the range breakout scanners. So you can make use of all of these, or you can take some inspiration from these scanners and make your own scanners. Okay. So without any further ado, let's create our next scanner. Okay. So my first condition is going to be using period max. Okay, wait, we will first have to put a bracket over here since we are subtracting and then calculating a percentage. So period max high and we want this for the past 50 periods minus period min 50 low. We are going to be dividing this entire result that we get by period min low. I'll be explaining y'all what this statement exactly means and how it helps us in identifying the stocks. Okay. So in this case, we are taking the highest point that was formed in the last period, last 50 periods, and the lowest point that was formed in the last 50 periods. Now the difference between these 2 points, right? We are calculating a percentage of that. Now this percentage should be lower than 5% because usually when a market is trending, the price tends to rally high up, breaking this kind of a percentage barrier. So this condition will help us to scan only those stocks whose highest and lowest points are within that 5% range, right? The next condition being RSI crosses below number 70. So you can see how we've substituted the last three lines of code that we used in the previous scanner with just one simple line of RSI crosses below 70. We are going to be implementing the scanner on the entirety of Nifty 500. You can obviously scan it on any of the pre-made baskets that we have over here, Nifty 50, Nifty 100. We have NFO futures available. Then we have sector-wise baskets of stocks available, right? You can also choose your desirable time frame, but in this case, I'm going to be using a 5-minute time frame. We will name this Consolidating Stock Scanner. Okay, so these are the results that the scanner has fetched for us. Let's take a few examples on kite charts like we did before. Let's plot CallPal first. Okay, we will match the time frame. Okay. So in this case, we can see that the stock is again in a range bound market, but at this time we have used the high and low points to identify this. The highs and lows in the last 50 period seem to be this. The high looks to be this, whereas the low could be this point, right? So now this range over here is not more than 5% of 14,000, which is why this stock has been picked for us by the scanner. And at the same time, the price seems like it has very recently crossed below number 70. Let me just change the bounds over here. overbought level to 70 and you will have a better idea. Yep. So right here you can see that the RSI has just crossed below level 70. Okay, let's have a look at another scanner. Oh, sorry, another result. Emphasis. Okay. So you must be wondering why all the results that we have got are more or less close to their support or resistance. Let me plot out the support and resistance right here for you. Okay. We have a strong resistance level over there. And I'm sure if we scroll a little bit backwards, we can also find support levels, which is here. So the thing with range bound markets is that the price is going to keep oscillating between these two levels until and unless there is a major tilt in buying or selling pressure, which will result in the breach of these levels, right? Which is why these stocks are always, they consolidate around the support and resistance levels. So again, this is how the scanner can help us identify such opportunities. It's a very amazing and powerful tool that traders can use to better their efficiency in the markets. Moving on, we are going to be creating certain strategies that involve taking trades in sideways markets. I'll be sharing some tips and techniques with you guys regarding these strategies, and at the same time, we will see how we can backtest these strategies at lightning speeds using Create Plus. Okay, so let's go ahead and create this strategy. So the indicators that we are making use of in this strategy is the ADX, the stochastic, and the opening range hour. I'll be explaining you what each statement means as and when I create the strategy. So ADX, we again have to make sure that ADX is lower than 25 for the previously mentioned reasons that when ADX level is lower than 25, it makes sure that the price is not trending. So ADX level lesser than 25. We are here looking for a stochastic crossover, right? So the stochastic indicator, just like the RSI, is also a price momentum indicator. So it has two lines, one fast line and one slow line. And a crossover takes place when the fast line crosses above or crosses below the slow line. So in this case, since this is a bullish strategy, we are going to be looking for a crossover, a cross above. Stochastic, we have to select the slow line from here, which is actually an average of the fast line itself. And whenever such a crossover happens, a high momentum is expected to come into the market. And another condition we'll be inputting that the close price should be higher than the opening range high on the hourly candle. Also, if the price is above the opening range, then it does carry some bullish properties with itself. It is considered to be bullish, which is why we have input that condition. We are going to be inputting 10 quantities. I have a basket of banking stocks ready with me, which I'm going to implement the strategy on. Our time frame is going to be 5 minutes. Stop loss, we can put 1% stop loss and 2% target profit. And in the show advanced section here, you can alter the start date and the stop date for the back testing and the start time and stop time for which the strategy will take trades between, right? Over here, I'm going to change this to a CNC order because this is a CNC strategy, right? So let's go ahead and give this a name. We'll be saving and back testing. So the backtesting results that are being generated over here are not being calculated using the new create plus function. This strategy has not been created using Create Plus. Now, when in the next strategy we will use Create Plus, you will see a noticeable difference between the backtesting speeds. Over here, after you have backtested, you have the option to still adjust and change all your conditions, your stop loss, your target profit, and you can run the backtest again. If you're satisfied with all your if you're satisfied with the strategy and you feel like you want to go ahead with it, you can simply choose this deploy all option and you can take the strategy live in the market. Consolidation bearish strategy. So now what we're going to be doing in this is that we are going to be converting a pre-existing scanner into a strategy. The scanner that we created regarding consolidation, we'll be creating or converting rather that exact scanner into a strategy. So we will go to my scans. This is the scanner that we had used. Now at the click of just this one simple button, this scanner will be created into a strategy right here like this. You can see that all the conditions are pre-filled and the scanner has been converted into a strategy. Now we can backtest this strategy, right? So this is a this is a consolidation bearish strategy. So it is going to be a sell position that we are going to take. Quantity 10. Let's deploy the strategy on pharma stocks. Very bullish run pharma stocks have had recently, but we are still creating a sell strategy on these set of stocks to display to you how even a counter trend strategy or how we can deploy strategies in a sideways market even when there has been a bullish or bearish run. Stop loss conditions and target profit, we would put 1 and 1. In order to understand what stop loss and target profit to put, you have to backtest the strategy and check its profit and loss and drawdown data. That's the only way to understand what accurate stop loss and target profit levels you can keep is backtesting. We also have a video on risk management which you can check out if you want to better understand how to set your target and stop losses, right? We are going to give a name to the strategy, which is a bearish reversal strategy. Let me just check if we have put in all the parameters correctly. Right. Okay, so we can go and backtest the strategy as well. Okay, so as you can see, pretty good returns have been fetched by this strategy in the backtest period. Also, the stocks itself, a 70% period return Oro Pharma has given in the past in the backtest period. So this is how much the stock has moved from April 13 to 11 July. And in spite of using a counter trend or a sideways market strategy, we have still managed to generate 18% returns using the strategy, right? So that is a very good thing here. We can also adjust the profit and loss metrics for the brokerage to get an even more accurate and deeper understanding of the profitability of the strategy. We can see the individual charts, the individual profit and loss charts for each of the stocks that we have mentioned. Also, transaction details for each of these stocks are available for your reference. These are all the trades that the strategy has entered and exited in the backtest period. Okay. Also, I would like to, just so that we can point out the difference in backtest speeds, I would like to redeploy the strategy and show you how much faster the backtest results are. So I think we can almost say that this is one of the fastest backtest results that we can receive in the market today. This is the fastest software when it comes to backtesting. So What we have done here is we have created two strategies. We have also converted a strategy to, converted a scanner to a strategy at the click of just one button. Now, for the first time, it is possible for us to backtest and understand the success rate of our scanners. And we have made it to the conclusion of today's webinar. The first key point is that in range-bound markets, the price does not follow a particular trend, but rather remains oscillating between two price levels. And it is not going to breach these price levels until and unless there is a major shift in market sentiment. Now, the main advantage of sideways markets is that you have a clearly established support and resistance level available to you. And you can decide to take your trades near these areas of values. We saw examples of many oscillators that we use today, such as the RSI, MFI, and the stochastic. These indicators work excellently in range-bound markets. We can also use range-bound strategies to reduce our overall drawdown. If we have range-bound strategies ready, then we can cover up the losses that were incurred by a trend following system. Because when the market trades sideways, these are the strategies that are going to provide you with profit. Thank you all for staying tuned right till the end of this webinar. If you have any suggestions regarding the webinar or the Streak platform itself, please do write to us on our support email, which is support@streak.tech. You can visit the platform by logging in on streak.zerodha.com. Also, do not forget to follow us on Twitter. Our Twitter handle is @streak.tech. You can follow us for updates on latest announcements and features. If you are new to the platform, then you can request a platform demo using this box over here. Everything ranging from basic strategies to advanced concepts will be explained to you in the demo session. So we are going to end the webinar now. You have been a great audience. Thank you so much for watching and have a good day.